investors have their attention fixed on today's 400 billion naira T-bills auction. Now, on the bond side, cherry picking is observed, particularly in the mid-dated maturities, with emphasis on the 2033 paper. Meanwhile, the International Monetary Fund, in its World Economic Outlook, projects Nigeria's inflation will average 26.5% this year and 37% come 2026. Kolawole Komolafe, Treasury Team Member at Access Bank, joins me now for more market movements. Kolawole, thanks a lot for joining us on the show today. Walk us through the expectations from today's primary market auction.
Hi, David. Thank you for having me. So you had mentioned that there is an NTB auction today where the DMO is offering 400 billion naira across the standard maturities. That is the 91, 182, and 364-day paper. So we expect, so we're just waiting to see where that would close. If you recall, the last auction closed at 18.5% for the 91-day paper, 19.5 for the 182, and 19.60 for the 364. So we'll watch to see where that would close. We do not think that it will close somewhere too far off where the last auction closed. So we expect the results today, and we'll see where that would close to set the tone for the NTB market to close the week and also possibly into the next auction.
And talking about expectations, finally, we have the Q2 bond issuance calendar release. Your take around market reaction to this, and then how you also see investors' positioning going forward.
Yeah, so on the bond space, we continue to see interest on the on-the-run bonds as the 2029 and the 2033s. The DMO released the Q2 calendar where there will be an auction on 28th of April, that's a Monday, where the same papers will be offered with sizes ranging from 150 billion to 200 billion for each of those maturities at the 2029 and the 2033. So we'll see. So market attention has also been focused, as the bond market participant attention has also been focused on where that bond auction would close. So we've seen a rather calm market starting this week.
And Kolawole, quite interestingly, we also having some feedback from the International Monetary Fund on the back of the World Economic Outlook at this moment. It's pegging at an average of about 26.5% inflation rate for the year 2025. And next year, we should see inflation inch up about 37%. Your take around these dynamics, especially hinging that closely to the money supply growth trajectory we've had so far. It's quite difficult to still tame inflation with such growth. 24%, that's a whole lot we have to deal with here. Your take around the inflation forecast here and how we would see the MPC position come next month.
Yeah, so inflation still remains a concern. It has proven to be rather sticky. The inflation figures that were released for March, we saw it print at 24.23, which took market by surprise, because if you look at the restrictive stance that the CBN has adopted, we were hoping that we're going to see further decline in inflation rate, but that was not the case. So the IMF's projection will be something to look at. You also mentioned the money supply that increased by to 114 trillion. Money supply, which again hasn't when you look at the stance of the central bank, is not something that was expected. But the inflation figures for April will determine what would happen at the MPC, which we expect to hold by next month.
Kolawole, thanks a lot for your time on the show today. That is Kolawole Komolafe, Treasury Team Member at Access Bank.